Good morning. Welcome to your first day of the Advent calendar. Where are they?
I know. Where's my chocolate?
Producer Phil, we're missing
Those
something.
whiskey Advent calendars. Could that be nice, couldn't it?
Maybe we'll have an Advent calendar with a profit in it each day for us to find. How are we doing, everybody? Did you survive November? That is one of the toughest months that I have seen in a long time because we had the FTSE flat, the S&P flat, the DAX was down 0.5% in November, but
Panic stations.
Nvidia down 12%,
Yeah.
Oracle down 23%, and Alphabet up 13%. I mean, what kind of trading environment is that?
Nvidia is flat over 3 months, and Google is up. Sorry, Alphabet's up 50%, something ridiculous. So yeah, it's what you should have done.
Yeah, now we know what we should have done.
Yeah.
Just market was obviously the market was going to be flat for the whole month. How did you all do? How did everybody's November go? I see a bit of chat in the Discord over the weekend. Just be reassured that was not an easy month by anybody's terms. So here's hoping for 2026. It will get a little bit easier.
It's because you insisted on buying the market. That's what ruined it. If you just kept out and stayed short, it would have continued to potter higher quite happily.
It was looking good until about 5:45 this morning when I looked at my screen and I thought,
yeah,
what on earth is going on this
morning? A
morning?
little bit of a post-Thanksgiving hangover, I suppose, really, maybe from the US, and then obviously we'll come to it in a minute with Japan.
Right, what's coming up on today's show then, Producer Phil? Pray tell, because I think Angeline's off gallivanting, isn't she?
Yes, she has told me she's gallivanting, yes. No, the word doesn't get used enough.
It's a good one, isn't it? What's the source of that word then?
No idea.
I
looked that one up.
Answers
on a postcard.
My scholar. Right, Beachy and I through till, 8:15, we go on to fast markets. That's before Axel comes in and gives you his trade of the week, and technically speaking. And then we've got my good old buddy Garth McKenzie coming in at 9:10. My trader friend. Garth will be joining us for his updates on the action. And we are going to be talking more about, remember when Maturin came in? Mm-hmm. And then Antonia asked on the Discord for more of the sort of process stuff that Maturin was talking about. So Garth and I are going to talk about that today. Bon weekend?
Yeah, very nice.
Good.
Birthday party, children's birthday party on the Saturday.
Is that good?
Not one of ours to go to one, yeah. So
that was even worse then, isn't it?
A little bit, yeah.
I'd never met a parent who goes, oh, we had one of the kids' mates' birthday parties the weekend. Oh, it's such a laugh.
No, well, it was all right. It could have been a lot worse. Well, yeah, it probably could have been that way. And then we had our first carol service on Sunday. So
I also did last night at, the Queensgate HTV. Oh, it was beautiful.
Oh, okay. It was nice because all in candlelight. I'm not singing for you, Gallery, not this morning. No, Silent Night's Christmas carol service is an Advent carol service. So,
well, what's the difference?
There you go. Well, it's different music, which always catches a few people out because they turn up and think it's a Christmas carol service. But
that's what happened to me.
You thought it was usual carols, and it wasn't.
We had Hark the Herald.
Did you? It's a bit early. Oh, you've lost Harkageddon already.
Yes.
There you go.
Yeah, that was a good one. But I'll show you the video after. Well, thanks for asking. I had a lovely weekend as well.
Sorry, did you have a nice weekend? Oh, he's a bit angry this morning.
Well, it's just normal, isn't it? Monday morning, you come in and have small talk in the office.
Do we? I don't. I don't talk to people.
Well, we won't talk about the Christmas party then, Chris Beecham. Did I see you?
No, you didn't see me. I was at home because my wife had something else on, so I was.
You didn't come?
No. Well, you didn't see me. You didn't know I wasn't there. I'm cut to the quick personally by that. No,
Axel's got a good story. We'll let you.
I haven't seen him yet to update me on.
Ask him how his Christmas party was. Good stuff. Right, let's go to some overnight action. Right, well, let's go straight to it because Bitcoin's down over 5% this morning. It was all looking really nice. Everybody was going to their Thanksgiving dinners. They were going, a chance to buy crypto. Let's get involved. And then, boom. What on earth has the Japanese said?
Yeah, you had the Bank of Japan Governor Kazuo Ueda, said it gave a clear indication, according to the FT, that the bank might raise interest rates this month now. So the Bank of Japan hike is on the cards. He said, if the outlook for economic activity and prices is realised, the bank will continue to raise the interest rate and adjust the degree of monetary policy accommodation. So there you go.
So that must have given the old yen a nice kick.
Gave it a boost. He also said that even if we raise the rate, accommodative financial conditions will be maintained, which suggests that he got room for more rate increases. So you've given the yen a bit of a boost. I mean, if you look at, I don't know, you've got it there, I've got it in front of me. He says, where's my chart?
I think they're sleeping in the gallery.
They haven't shouted me to
Come on, boys, wake up.
So there you go.
We've got. I don't know if you're watching. I'm a Celebrity, Get Me Out of Here.
I confess I'm not, which probably doesn't come as much of a surprise.
Not a surprise at all.
I've never seen a single episode. I'm delighted.
So there's a character on there called Angry Ginge, right?
Is that you?
He was. But we've got his twin who works for us in the gallery. So we've got Happy Ginge.
Oh yes, of course.
Right. And then Cam.
Yeah.
Angry Cam and Happy Ginge.
Cam's never angry. Oh, he is sometimes. But yes, if you look at the bank dollar yen, this is the 4-hourly chart. You can see how we've been steadily rising all the way through back into November and into, well, back in October rather, all the way through November. And so we've come off a bit.
Yeah. So we've got a little bit of strength.
Yeah. If you look at the weekly chart for more context, as people were saying, oh, it's getting back to the 160 level, which means it's time for the Bank of Japan to intervene again, etc., because that's what happened. Obviously, if you cast your minds back to the fun of July 2024. That's when it last did it, or that he had the Bank of Japan really come in, didn't you, strongly to upset everybody's summer.
Now, remind us why a strengthening yen
you're going to do this to me on a Monday morning.
is so outproportionally negative for Bitcoin.
Oh, for Bitcoin.
Yeah. Well, it's for liquidity.
For liquidity, overall. Because obviously you've got the yen as the funding currency. I feel like I've been marked for this answer really afterwards. The carry trade where you borrow in the yen because it's a low yield, you borrow it to trade in high yielding currencies like, say, the Aussie dollar, for example, and almost anything else basically with the Bank of Japan, and then provides liquidity across the markets to trade in things like Bitcoin. And the expectation is, from what it seems to us this morning, that you've got Bitcoin down 5% because even this slight strengthening of the yen relative to the dollar has been enough to, say, upset this nascent rally in Bitcoin, which, as you say, has fallen out of bed this morning, down 5%. Does that work? Does that sound plausible?
Top marks. 72%.
72? Oh,
yeah.
Sorry. What did I miss?
Just and can subsequently follow into a risk-off environment as people rush to buy their yen and sell their risk assets.
So if we're arguing this Bitcoin move is a liquidity event, shall we say?
Which is quite interesting because later today we are going to get the announcement of Kevin Hassett as Fed chair.
Is that definite then?
Nope. I'm front running it.
Oh, okay.
Because he said a couple of weeks ago, he goes, I've pretty much made my choice.
Right.
And so if Hassett was can we get on the prediction markets? Let's see if we can make some money. Who do you think is going to become Fed chair, announced later on today? Is it going to be Kevin Hassett? Is it going to be Christopher Waller? Is Jerome Powell going to get another term?
That would be the left field. Could you imagine if he actually decided? Actually, I quite like him. I like having somebody to beat up on.
Or is Trump going to appoint himself? No, it'd be Bessent. Bessent doesn't want the job.
He doesn't want the job. No, don't blame him. Really, he's quite happy where he is. Of course, Hassett is Mr. Dow 36,000, isn't he? From October 1999, he wrote the book. Dow 36,000, the new strategy for profiting from the coming rise in the stock market. What happened after October 1999? I forget.
What about his monetary policy? How does his CV look for that?
Oh,
or is he just a puppet?
I think the view is he's mostly very much a tool of the emphasis on the word tool of the president, and it will do as he is bid. Really, indeed, the entire Fed committee.
Well, that's not concerning at all, is it?
Well, no, I suppose it does need a bit of a worry.
However, the one thing it should give is liquidity to markets, and that's why I'm so confused at Bitcoin being down, because whatever happens in Japan with small incremental rate increases
Seems
will be negated
subsidiary.
later on.
Yeah, exactly.
So let's have a look at where treasuries are with that news then. We've got the 10-year at 4.04, up 0.02, and the 20-year at 4.666. Ooh, is that an omen? And that's up just 3 cents on the day. So yeah, we're there's not much concern for one of our major risk assets being down 5%. I'm confused by, and also the Nasdaq being down 1%.
Yes. Well, is it? I don't wish to dismiss it out of hand. Is it the post Thanksgiving just hangover that it's people have woken up and seen the Nikkei down 2% because, and that was as bad.
So the Nikkei's down 2% as well.
Yeah,
Sorry,
so
I missed that.
that's your main impact really this morning. You had a nasty drop. We were trading above 50,000 again, and now we're back 49,275. But if you sort of take Friday as a write-off, you'd rallied hard into Thanksgiving as ever. Surprise, surprise.
Yeah.
Is this just a little bit of a jolt to start the first month of trading? So, as Hassett, of course, is known for being very pro on rate cuts anyway. Before Trump came in, he's always said this. So the idea is that, again, we're going to run the economy hot. We're going to make sure we boost economic growth with the risk that goes with inflation. So.
Yeah. Okay, great. Well, let's have a look at those Asian markets then. You see the Nikkei down 1.9. China doesn't care, up 50 basis points, up 70 in the local market, and then Nifty 50 largely unchanged. As is the FTSE 100, 9,700. We're back just with our noses just above that level, down 15 bips. But if we just want to go back onto the overnights, the oil price up 2%.
That was OPEC chose to keep output levels unchanged for the first quarter of 2026. So
that was yesterday's announcement.
Yeah, so that's what's driving that higher in early trading this morning.
Good. And volatility up 3% for the first day of December as well.
A jolt to start the month there from volatility. Admittedly, it's got absolutely slammed since 21st because we were above 23, weren't we, on the IG VIX product, and then back to 19. So we'll see. Are we back off again to the races, or is it just a bit of an upset for the beginning of December?
Good. Right. China PMI disappoints manufacturing at 49.2. And yeah, that is, of course, a contraction below 50. So not great numbers there. But Chinese market up despite that. Yeah, it's a tricky morning, actually. A tricky morning for Rachel Reeves as well.
Oh, yes. She's not had a fun weekend.
The news has finally cottoned on to what we revealed in The Art of Investing 10 days ago with Adam Smith telling you he could not understand why the income tax discussion ever came about because the OBR gave their final numbers to Rachel Reeves on the 30th of October, a number of days before she made her emergency press conference.
Yes.
And he said that she's just lying.
Yeah.
And that's what the press is full of this morning.
First headline in the Times, Starmer and Reeves misled cabinet to justify budget tax rises, which is... It feels like they stumble from one thing to another. The budget was okay.
Do you think so?
No, but I think it was okay for them from their perspective.
Oh, it was great for the politics.
So it was that, we've got through it, blah, 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 and then this comes through to give something else you can beat the government with. It feels like they just stumble from one... They do. They stumble from one crisis to another. And now there's the whole, any messaging that you've got, because the PM's had to sort of step up his growth agenda speech. This is the next thing he wants to talk about. But this is going to be consumed within, did you know, what did you know and when? And why did she go on breakfast TV, as Badenoch said, to interrupt everybody's breakfast, to say we're all in the hole.
Did you watch her on Kusenberg yesterday?
No, I didn't.
She was all right.
Prefer to spend my Sunday morning sticking a fork in my thigh rather than watching it.
Too busy singing.
Yes, I was thankfully busy anyway. But
Kusenberg did her usual just annoying, with somebody with a bit between their teeth, asking the same question over and over and over. And she answered it twice with the correct answer, and she came back and said to her again, I was shouting at the TV. I'm like, she's answered your question.
One of them, aren't you?
She can't. She's got 4 billion of headroom, but the bond market won't allow her away with 4 billion of headroom.
Because it's not 4 billion is nothing.
Yeah.
It's wiped out in a day if something moves. So it made perfect sense, doesn't it? Really, but
yeah, good to
more headroom. But certainly the idea that they knew all this stuff and then got everybody riled up for tax rises that didn't happen.
Yeah. But yeah, good to see my my friend Abigail on there. But unfortunately, she had to sit next to Piers Morgan. So I have asked her how that went.
It's fortunate.
Of all the people, you go on, you know, Koonsberg for the first time, and so you're excited, and Kemi's on there, Rachel Reeves is on there. You think you're going to meet all these amazing people, and you get sat next to Piers Morgan.
You're not a fan of Piers Morgan?
Are you?
No, not really.
Voice of the people. Right, what have we got coming up in this wonderful week then, Chris Beecham? If only somebody did a value-adding week ahead.
Where have I put it now? Hang on. There's a calendar in front of you. There you go. So today is the... It's a funny week, of course, because it should be payrolls week. And it's not. We get ADP data on Wednesday. We do still get the ADP numbers. It's on the week ahead. I will summon that up on 1:15. So there's expected to see a 15,000 drop in job numbers, but that's the only set of the two, the only one we get this week. And we don't get payrolls this week. That's delayed, of course, to mid-December. So ISM PMI today at 3 p.m. That's still in contraction territory. They're expected to rise. And then if you go over Tuesday, inflation in the Eurozone, key thing to watch. Wednesday goes on to China PMI overnight, and then ADP, as I said. Thursday, initial jobless claims, and then Friday, Canada employment data and Michigan consumer sentiment. I'm not seeing, I don't think it is PC on Friday. Is it? Maybe I just ignore it because I don't believe PC is worse to anybody. Is it on there?
Well, let's have a look first at what is expected today. So 48.7 expected for the PMI today.
That's come down a little bit since I looked at it. Okay.
Employment at 46, new orders 49.4, and prices up there at 59. Sorry, those was last month's. But you'd like Friday, so let's go through it.
It might well be PC. I might have just ignored it because I don't think anybody really cares about PCE data, especially not when it's September's PCE data.
Oh, is it September?
I think so.
Yeah.
Yeah. No, it's fair enough. It's
Wednesday's decent. Wednesday, industrial production.
Yeah. Services PMI.
Yeah, and services, and the oil change. And then, yeah, Thursday, nothing really. The jobless claims. And then, Challenger job cuts on Thursday. Sorry, yeah, that's the one. Challenger job cuts.
Are we caring about them this time around?
Ooh, there it is.
So September, Michigan sentiment on Friday, preliminary, the first one you get. And then, yeah, September's PCE price index. So if anybody cares about that, please don't tell me.
They're taking a while to catch up, aren't they?
Yeah. Strange, isn't it? From a country that goes on and on about how hard they all work and how nobody has any holidays and how the Europeans don't do any work, and then, oh, sorry, here's your data from 3 months ago.
Yeah.
No, actually, it won't.
Should they just have written off September like they've written off October?
Exactly. It just didn't happen. It's much easier.
Yeah, and just go straight to the current data.
Yeah. Yes, because you don't worry about PC. Just focus on getting the payrolls data out in time before the Fed meeting, of course, which is next week.
Yeah, I mean, so do you think the Fed are going in blind? Or do you think
it feels like it, but they must have. Well, the idea that they had the same data as we do and get it at the same time, no one's slipping them data in advance with an 87.4% chance for cut currently. But you do begin to wonder when the whole focus has been, oh, you can't move too soon because you're flying blind. It's the best thing to do is do nothing. And suddenly everyone's coming out and saying, actually, no, we do think rate cuts are a good idea. Big fan of rate cuts, Mr. President.
Yeah.
What a good idea.
Talking about flying blind, you've reminded me of the story in, is it the Financial Times or is this, yeah, here we go. The A320 needing an emergency upgrade. And if you know anybody who's worked for EasyJet in the engineering department or the software, they've had a nightmare of a weekend because they've had 290 planes to do an emergency software update on. And American Airlines, even worse. American Airlines have been sort of to the pump all weekend. But yes, this was because of a solar radiation problem, that planes were going to stop working in the middle of the air.
Well, that's not ideal, is it?
If they're flying too close to the sun.
You might call an Icarus problem.
Exactly. Oh, I hope it was called the Icarus update.
Yes.
And yeah, so, but no need to worry now. Those have all been fixed. EasyJet, Wizz Air, and American Airlines finishing the software update. So you will not be delayed if you're jumping on a plane today because of that. Maybe because of something else. Are the French deciding to work?
Probably. So what? So it was just that the solar radiation. What about it? Why was there suddenly an issue that it wasn't the day before?
One of the planes had a problem, and once they did all the testing around it, they realised that this impact of solar radiation affected the mechanics of the aeroplane. So
How long has that been around then?
I mean, it's always been there, but it's just that at last it actually...
Oh, right, okay.
Global warming, Chris.
I'm not an engineer, so I don't understand, but there you go.
Yeah.
Okay.
Investigation to be undertaken into an incident in late October when a flight from Mexico to the US suffered a steep drop in altitude that resulted in injuries to 15 passengers.
Oh, okay. Oh, fair enough.
Yeah. So yeah, but it's a software update, right? It doesn't take long,
Yeah.
I think.
Well, it takes long enough to update my laptop, so imagine how long it takes to do 220 planes.
What else? We in the Times we got Gales. Now Gales. The reason I've included this story is because it's opened a humongous cafe right opposite South Kensington Station. So I went in the weekend and it was buzzing. There must have been about 40 staff members there.
Yeah, they are bonkers places.
Yeah, but incredible food. Fresh avocado on sourdough toast, beautiful. Went back the next day.
Of course, you're having avocado on sourdough toast. Why am I not surprised?
As the original millennial.
Yes, but you have your house, so you can spend it on what you like. So that's the key thing, isn't it?
What, my rent?
Yeah. But they're everywhere, aren't they? Now they're going very much a ubiquitous sighting. So we've got one in Berkhamsted. There's one in Harpenden near us. All the affluent places.
And I think he was trying to sell it, wasn't he? But then he couldn't sell it, so he's decided to open a gazillion new sites instead.
So is it the new Greggs? It's gone up market. So as Greggs declines, Gales comes through.
Don't. Gales to Greggs to
Same, aren't
Gales.
they? They're both cafes. They're both flog coffee and cake. I mean, it's the same thing, really.
With the high level of growth in this country, then that's the kind of step up that people are looking to make from Greggs to Gales.
That's the messaging you should get from the PM. We want to be a Gales country, not a Greggs country.
Yes.
More avocado on toast rather than steak bake would be the next.
See, progress.
Yeah.
And it's
Doesn't
coming.
poll well with Labour, though, I shouldn't think, you know.
Yeah.
So much people don't like who owns Gales. Is that the idea? People protesting Gales, I think.
Oh, really?
I think so.
Yeah.
Because is it Luke Johnson is one of the investors in them?
What's he done wrong?
I think he's pro-Israel, I think is the idea.
So they're going for Gales on that.
Yeah.
Right, what have we got for upgrades and downgrades? Well, Reckitt Benckiser has been raised to overweight at Barclays with a price target of £70. Lufthansa raised to neutral at JP Morgan. And any other stories? And Richemont raised to buy at Deutsche Bank on the hopes of luxury rebounds.
Oh, good.
For next year. How was your Black Friday shopping?
It was non-existent.
What?
As it is every year. I never look at
Bargains.
Friday. There's nothing I need.
New shirt?
Take that from somebody wearing a polo shirt. I dressed properly this morning.
Properly?
Almost properly. Well, for this studio anyway.
I'll
come back after the break.
Yeah, let's go. 7:54. Right, come back and we'll give you some opening signs. Although the FTSE down, James Bond 007 9711. Bit tougher for the DAX, down 40 basis points. But it looks like a small lower open to start off December. We'll see you in 2 minutes for the opening bell. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday, I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
Welcome back.
Oh, welcome back. Sorry, you're not talking to me this morning. Why annoyed you? Is that the...
No, it's the other way round.
Oh, sorry.
Somebody
I'm just engrossed
somebody
in
said
my-
that I look like the Cookie Monster. It's not fair, is it?
That's very good.
It's my new wool jumper. Get a bit hot in here now.
Yes, as Andrew McKelvey says, former finance minister Tulip Siddiq sentenced to 2 years in jail. This aunt used to be dictator of Bangladesh.
Well, talking about jail, I just went to make a lemon and ginger tea, and I was standing by the coffee machine, and there was a new lady in the office, and she introduced herself. I said, "Oh, which desk are you on then?" "Oh, I'm the new UK compliance head."
All right.
Okay. Morning. Would you like me to make your coffee for you?
Everything we say is compliant, surely. Don't laugh, gallery.
Right. And good morning to the FCA. I had the pleasure of meeting about 8 of them.
All right.
Came along to the Bank of England on Thursday afternoon. They're normal people. It was brilliant.
I'm sure they
Really
are.
good sense of
They're
humour
all
as well,
normal
actually. We had quite a laugh. Right. What are we expecting then? We've got 25 seconds till Chris is going to ring your morning bell. And
So exciting.
let's see if there's any more value added from Mr. Andrew Hart. Upgrades. Yeah, we've been through those ones.
Did you get the Compass upgrade? Raised to outperform RBC.
That's one. And Air France. And then downgrades on Vivendi, Total, and Jet2 downgraded, and EasyJet downgraded, and Whitbread. Oh, Whitbread. What a mess. What a mess.
That was a fun Friday, because at least it gave us something to talk about on a Friday with the US being mostly out of the picture, so that was fun. But
what do you mean talk about on a Friday? You weren't... Oh, yeah, because you didn't come and party on Thursday night, did you?
No.
Right, here are your negatives for the Monday morning. EasyJet not getting a good start at all, down 1.8%. SSE down 1.5%. This is causing me some pain here. I'm short.
Are you in SSE?
£20 level. I'm short puts from about 22.60. I think I put them on at. Rolls-Royce down 1.4. It's quite a negative.
Is there a read across on EasyJet to Rolls-Royce, do we think, from the airline stuff, or is that just...
Only if it's general...
It's not the engine, is it, I suppose, maybe?
Travel. No, it's not from... that 2% is not from the upgrade, I don't think, from the software update. And then, yeah, Lloyd's down 70 bips, but yeah, not too much else there.
No.
We got any winners? Do we have any winners? There it is.
There's brackets upgrade. Sparkling as if it had been cleaned by...
So bang!
Pun didn't get off the ground, I'm sorry, it was terrible.
Well, that's more of an EasyJet one.
Yeah, it is, sorry.
Iron Brew, small up 60 basis points. We've got Imperial Brands up 30, but yeah, that's where you want to be hiding today as the start of Whitbread. 24.57, I'll have some of those, please.
Yeah. And of course, Fresnillo, because did Silver had a sparkling Friday, didn't it, I think? Oh, my network's not working.
Right. 500 Whitbread I buy at £24.56. Yes, the downgrade was not particularly pleasant to their forecasts. But if you look at it, then the cost savings, basically, I ran through this with Jamie Goldstein on Friday. He, of course, owns one of the hotel chains in London. And he explained to me the hoteliers and the large box retailers have really been screwed in this budget.
Really? Okay. This is
horrific.
This is the story that's yet to come out then, is it? The full detail of the impact.
Well, yeah, so that was their profit warning. But the change in business rates are really impactful.
Right.
The person they're targeting is the data centers and the Amazon warehouses, right? That's what they're going for. So the bigger you are...
That's what they're aiming for in the taxation.
Exactly. Right. So to get Amazon, basically.
Right, okay. Oh, good.
So the bigger you are, the more you get impacted.
Right.
Now, of course, these hotel chains are fairly large in size. So Whitbread have taken this big hit. But when you put through the multiple, then the hit that they're taking is the same as the market cap that was taken off. So basically what I'm trying to say is the whole profit warning was then multiplied and removed from the market cap.
Right.
Right? So it was a 10% hit and 10% was taken off.
Right.
But they had cost savings in there as well to mitigate some of it, and they weren't given any credit for that at all.
So it's an underrated part of the story then. Okay.
Yeah.
It's interesting.
So that's why I am buying some this morning with a further, because they're down 1.5% this morning because they've been downgraded.
Right.
Now, the downgrade's because of the profit warning, so you shouldn't get an additional hit from a downgrade on a Monday morning. That's why I'm buying them, and hopefully they get back to maybe down 0.5% on the day, something like that. But just to update the losers this morning, Rank Group down 2.6, BAE Systems also down 2.5. So it's Rolls-Royce is more of a defence story rather than the aeroplane story.
Yes. Where are we on the Ukraine deal? It was supposed to have happened by now. Nowhere. Seems to have dropped off the radar yet again. So
I don't think it's on in the newspapers this morning.
No.
I'm sure it's on there somewhere. Right, the biggest losers in Europe. Oh, well, hang on. There's Air France up 5.7.
Yeah, well, it's an upgrade this morning, wasn't it?
Wow. That's a punchy move on an upgrade.
What it was, raised to overweight, price target of €14.
Okay.
Deutsche Lufthansa raised to neutral at JP Morgan, €7.50. Sorry.
Okay, so it's Deutsche. So my best mate's just started in hedge fund sales at JP Morgan, and his second day was the Christmas party. They all went and did karaoke. But he says, yeah, really good atmosphere, good place to work. Lufthansa up 60 basis points. Mercedes-Benz is a small winner. Luxury names benefiting from that Richemont upgrade. But do you want to run us through the losers there?
Ubisoft down 3.9%, Rheinmetall off by 3%, also down this morning Airbus, Stellantis and Schneider. So Stellantis, cars once again. Every time I come on it's cars, isn't it? And Adidas. Which one, are you pro Adidas or is it Puma? Which one are you?
So Adidas had a Black Friday sale that was down 50%.
Yeah, you gave me the excruciating detail on this last Monday on your shopping adventures.
So to me, that rings that they're kind of desperate because Nike were nothing like that.
Oh, Nike, okay.
So and I'll tell you what, they were 50% off and I still didn't buy a pair of trainers. So they all look the same.
I could have told you that.
Yeah. And I did go in again I was in Carnaby Street on Saturday.
Doing a bit for the economy then?
Well, I actually didn't buy any in the end. I went to a comedy night instead. One of the early 7:30 show. And there was two girls in the front row and one of them was especially drunk for her 21st birthday. And
Especially drunk.
Especially drunk.
Okay, drunk kind of special, okay.
So every time the comedian was saying something that was marginally funny, then she was whooping and clapping hands.
Dear.
So the first 3 times that happened, everybody laughed, but they literally were thinking about physically removing her by the 3rd act.
Oh dear.
And it completely ruined the night. So that went down well.
We should Endeavour Mining and Fresnel both top moves in the FTSE 100 this morning because, of course, silver, if you go to my screen, this is the Google comparison chart. This is what you should have bought over the month because gold up 6.5%. Silver, the Google of its asset class, up 19% over the last month. New record high for silver this morning. So absolutely storming away. It's really interesting to see that. We know silver is obviously gold's racier cousin, more exciting, not as liquid, but yeah, absolute storming month for silver prices at $57.44 now.
I'm just looking at ASML is strong this morning, and I wonder, there's a story around China in NVIDIA in the Sunday Times today. I'm just trying to find it, but basically saying that China don't need any more NVIDIA chips, that the supply of NVIDIA chips for inference
We've already got one.
is fully utilized until 2030.
2030?
Until 2030.
You don't need any more chips, thank you very much.
For inference.
Okay.
For AI, for teaching AI, teaching models, they still need them.
Yeah.
But they're banned. They can't have those ones.
No.
Whereas they can have the H20s, but they don't need them. So I think that's why NVIDIA is a little bit weak this morning. But in that same story, it talks about how the local suppliers are, going at full belt.
Right.
And I wonder if that's why ASML is strong. So ASML up 1.6 this morning and about to break out, actually, of that recent range.
There she goes.
Looks decent, doesn't it?
Yes. If you like your 10-minute charts.
There we go. So what's that? That's gone back. That's a week. So let's look in the daily. Yeah,
They had they've had an incredible run, haven't they, of late? They sort of didn't participate in the rally and then suddenly they played catch up in a massive way.
But also that's a nice little holding pattern they've had there around the 900.
Yeah, this is what producer Phil and I would call a choppy consolidation. Klaxon for that sideways movement. But yeah, you can say head back to those recent highs and see what it does there. But yeah, really good recovery there.
But yeah, it just really sticks out on a day that the Nasdaq's down 80 basis points to see ASML at 1.6.
Yeah. So that read across, how are our Mag 7 doing in early trading this morning? What's the Okay, so Tesla's off 1%, Nvidia off 0.8, Meta's down a little bit, Amazon, Microsoft, Apple's down a little tiny bit. Nothing too much across the board there.
Guys, can we have a look at my screen, please? Thank you. Moderna down 2, CrowdStrike 1.3. CrowdStrike. Meta down 1.1 at 640. Palantir down 166. Tesla, Uber. Where is Nvidia? Nvidia down 80 bips at 175. There's no real reason why the Nasdaq's down.
No, and of course the week ahead we didn't cover earnings, mostly because there aren't any, but we do have this week. CrowdStrike is tomorrow, Salesforce is Wednesday, Hewlett Packard, Dollar General, Lululemon is on Thursday, but from the UK, very little. SSP and is perhaps the only name that anyone really cares about. So earnings have dropped off a cliff this week. You can tell it's December, the last trading month of the year, as we like to say.
Back to economics, Christopher.
Back to economics. Well, it's all about the Fed meeting now, isn't it? We're in a blackout period, of course, for the Fed as well, so they can't say anything, thank goodness. We spared that for a week and a half.
Barry Sullivan helping me out there on the story. So yes, Nvidia chips very inefficient for inference. So the Chinese are making their own there, but Nvidia is still king for training models. So that's the story there. Unfortunately, the Chinese are not allowed to buy those. And then Nike, Lee was shopping at the weekend as well. Nike added a ton of extra discount over the weekend. Was that in the store or online? Because online they had the discounts, but they didn't have them in store. But a little tip for you, in-store price match online, if you show them the picture of it. Hey, what about that?
Sorry, who are you talking? Just the trainer update special, isn't it, really?
And then, yeah, a person, I thought it was a Pearson, 1181 saying, markets are not moving despite Japan's 10-year government bond yield surging to 1.84. Well, yeah. Nasdaq's down 70 basis points.
Yeah, and I think we knew they were leaning towards a rate hike, didn't we? Do you think it's fair to say they were sort of they're still, having done the opposite of everybody else for years in terms of cutting rates and leaving them ultra low, they've now decided that they do like a rate hike in Japan.
Yeah.
So I think it wasn't like July 2024 when suddenly they were talking about it and that caught everybody hot. This is a Bank of China that we now know is in hiking move. The one thing you have to watch is the 2-year, which is only really just about crossed at 1%. So you can go on and on about 20 and 30 yields, but the 2 years perhaps the immediate one, and that's again not showing massive signs of market stress. So I think maybe they've kind of learned their lesson that nobody likes a Bank of Japan surprise.
Yeah,
it's best to communicate this stuff
slowly
in advance. Slowly is the best way to do it, really.
And that shows you the currencies. The dollar, yen, 155.36. So that's
a big move on the day, isn't it? And getting some ground against the euro as well.
Reassuring on the cable price. 132 after all the
still so weekend. Calm. There's no one's discovered a surprise yet, have they? Now, if this, because it's interesting that the Times story about Reeves and Starmer, ministers have accused Keir Starmer, Rachel Reeves, of misleading the cabinet. So it's not just some MPs; it's actual members of the cabinet are saying we weren't told about this, or we were given one story and
we could do with a new story, to be honest, like a footballer having an affair or something. Because it's just dull now. The budget's done. We're not getting any growth for the next 20 years. No. And we move on.
Watching this slow motion demise of the Labour Party before the May elections. Because I don't know about the first lot of polling that's come out. I think has not really moved the needle either way. So there was a poll on Saturday that put Reform at 31, Labour at 21, up 2 percentage points, but only up 2, so still well behind.
Were the Tories on it at all?
17. So, and the Green Party. This is because all the risk is that the Greens are continuing to make progress in the polls because a lot of Labour voters have gone, well, if they're not going to,
what would fantasies act?
Yeah, the hypnotist. But you can tell that they're worried because they got name checked in Reeves' speech. And that's that kind of, they got mentioned, as did Nigel Farage, but they got mentioned because they are concerned that they are losing core votes to the Green Party.
Yeah, great. Just cancel all the debt. Don't pay
Tax
any
the
interest on
billionaires.
your debt. That's how you save
Yeah,
the money.
MMT all over again. We did this 3 years ago. It didn't work.
Horrific. Right, quick break, and we'll be back for Fast Markets after this. It's 8:15 in the morning. If you've got to be at work for 9 o'clock, get your ass out that door.
What are we doing now? Don't forget we're doing.
FTSE, DAX, NASDAQ. Gold, the market sings. Let the stories be told. Hear the bells at 8 a.m., the kingdom's awake. With candlesticks arising, the charts overtake. From Handel to High Street, the rhythm is clear. The brokers are marching, the futures are near. Lloyd's, Barclays, AstraZeneca, Shell, and BP, Glaxo, Tesco. Trade me for right, trade me forever. With IG we dance 11,000 endeavors. Trade me for right, trade me tonight. 24/5 we ignite. Strings and guitars in a furious flight. Numbers are dancing like candles at night. ETFs glowing in gilded refrain. We laugh at the charts, then we play them again. HSBC, Vodafone, Rolls-Royce, markets rejoice. Markets rejoice. Trade me for right, trade me forever. With IG we dance 11,000 endeavors. Trade me for right, trade me tonight. 24/5 we ignite. This is not financial advice, but the harpsichord says buy, and the bass guitar says sell, and the choir screams, guess the charge. Trade me for right, trade me forever. The stocks are alive, every note is endeavor. Trade me for right, trade me tonight. 24/5 we ignite. FTSE, DAX, NASDAQ, gold. The market sings, let the story be told.
Well, that was good. I really enjoyed that tune. That was good. What's it like? Phantom of the Opera or
It
something?
was a bit Android level, wasn't it? Trading Baroque. I did think there was a bit of sequence, sort of bark sequence in there. I did think that, actually.
This is not financial advice. That was my favourite line.
We should get that more often.
Yeah. Right, Chris Beecham got it, but not before Funky Gibbon.
No, I was slow this morning, sorry.
Good job, Funky Gibbon. In there
Had his
first.
coffee this morning.
David got it as well. Terrible.
Has been, sorry.
Monkey Man and Happy Tyke as well. Well done.
I was a bit latte with that one.
Oh, we'll give you that.
This is what you get. This is why people tune in, is for the atrocious puns.
Right, we need a weather update. How's it looking out the window as well? It's not working. That's how bad it is.
It's so awful. We've just turned the camera off. So.
Right, I have been looking to buy the Wisdom Tree European Defence ETF, and it is now getting to a level where I'd be interested. So we've seen it come right back. So this is, of course, Rolls-Royce, British Aerospace.
Is this the NATO one? No.
Rheinmetall, and no, you've got to have a certain percentage of your revenues actually in defence for this one, not like the NATO one.
Okay. Because there was a thing in the FT this morning about NATO was suggesting taking a more staunch line, more aggressive posture with Russia, which is always a headline you want to read, the words aggressive and Russia in the same headline. But so maybe that's something worth noting.
Right, so 700 of these I'm buying at £24.67. Lock that in. Oh, no. Market only tradable in stockbroking. Must be the European one, is it?
Something like live TV, is there really?
Go for the European one instead. So let's do 600 of that one. Do we get this one? No, they've changed it. I have to put it into my GIA account. Right, that's annoying. What else have we got this morning? Smarter Web we haven't looked at yet. Smarter Web with...
Where are we now?
With I love when Cam is making a comment on stocks from the gallery, we know he is involved. And he says...
That's the way to learn about markets, you've got to be involved.
We don't want to look at that. So yeah, Smarter Web down 12%, of course, because it is that play on.
Yep. Beautiful on the way up, not so good on the way down.
Still, I'd love to see a reason why Bitcoin's down 5% this morning. If anybody's got one, let us know. And
profit-taking claps in the gallery. You should be a market analyst with that kind of approach. More sellers than buyers.
We got Pinsana up 0.4% this morning. That's our rare earth name. And then Graham Dixon in his new one, was it Up? Oh, what was it called? Uphold? No. Remind me what Graham Dixon's new stock name was called.
I haven't the faintest.
It was the oil name, Oil Explorer.
What?
Upland.
Upland.
That was it.
Upland.
Let's see how that's doing. He's done it again. He's absolutely done it again. When was Graham Dixon in last week? It was the Wednesday, was it? Wednesday the 26th, he came in and it was trading at 3.2. It's now 20% higher at 3.9. Well done, Graham Dixon.
Yeah, very good. Nice little move. On this dull morning otherwise, futures, US futures recovering. So we were down on the Dow, we were 47,450, 47,519 now. So we're up a little bit. Futures looking to move a little bit higher.
Just taking a very quick look at my portfolio. I have been reducing it because of the volatility in the market. So, and trying to get it down towards December as well. So gradually let stuff roll off. You can see the Whitbread I bought this morning. Oh, that's done. That's nice. That's already up 1% on that. Then we've got X-Trackers equal weight S&P. We've got, 20 grand of that. That's against my short call position in the S&P, but I prefer the equal weight. Of course, the equal weight, your maximum position size, I think is like 0.5%, going down to 0.05%.
Right.
But none of this silly 8% of the index kerfuffle. Nvidia now, I've got a lot of short calls in Nvidia, so I'm long 100 stock just to trade the vol on that one. But I'll show you those calls positions, and then. Got the same, I'm short puts in Palantir and I'm short puts in Oracle. So I've just got a little bit of hedging the delta on those. So where are my options on Nvidia at the moment? Well, I'm short calls at 210, 205, 190, 185 and short one at 170. So that's why I'm long the 100 shares, because I'm short a call, i.e. I have agreed to sell Nvidia at $170, but that's because they paid me $9 for it. So essentially you're selling it at 179. I'm also short puts at 185, 170 and 160. So basically saying I think vol is too high in Nvidia and it's going to come down. And then Oracle, that is my nightmare at the moment. That is costing me a horrible $5,000. Well, no, it's not costing that much because I was short calls as well, so that paid 3,000. But we're short two of the 250s. for deck and one of the March 100s. But you can see the huge premium you're getting there. You're getting $15 for being short. So what's that? 7% you're receiving for being short the 200s. And then short one of the 260 calls. Because if it gets back up there, I'll be very happy anyway. And yeah, and then still short calls on the S&P 500. So I do not think it's going up to 7,200. We got big short position there. That's what, about $100 a point. So yeah,
Did we make 7,000 before Christmas? I wonder.
700, yeah, about $700,000 worth of short notional on there. And then on the other side, I'm happy to buy it at 6,250 because I've still got my pension sitting in cash there that I want to get in. So I thought I'd take a bit of yield enhancement there.
So what else is moving this morning? We've got oil. We did oil still up 2%. Gold just continued to push high, nearly 0.8% higher. So a decent morning. In fact, you've got 1% on gold with that one. Okay, this is different to mine.
It's creeping back up there, isn't it?
Yeah, good old recovery. So it seems to be back in play. Not quite as frenetic as it was, but certainly back in favour. Sorry.
Yeah.
Ahead of obviously the expected on the Fed rate cut this week. Bitcoin's still down 5% so far this morning.
Not this week. Next week.
Next week.
Thought we had missed something there. Copper. Copper's making really nice progress. That was my idea in The Art of Investing that was shot down by Poppy. Poppy, if you're on. No interest in copper. We got too much commodity exposure, he said to me.
Oh. Copper's an interesting play though, surely at these levels.
Well, it is, but we've already got 7% of our whole portfolio is basically in copper.
And copper's this morning. Miners having a good morning, the FTSE 100. So they are, yeah, and leading the way. Well, almost leading the way. So Fresnillo is still the top, nearly 4% up on Fresnillo. Glencore up 1.6. Antofagasta up 1.3, as is Anglo American.
So a really good start to the month for the mining stocks then, because that is going against the beta of the market. So you got US having a really weak morning and the miners going higher. I wonder if there's talk around some stimulus because of that China PMI was weak.
Yeah, it's always a good story for at least 24 hours weak China PMI.
Yeah.
Stimulus. The old habits die hard. The 2009 habits certainly die hard, don't they?
Reserve rate ratio cut. Up they go. BP, that's also getting back up there, £4.56. So you continue to see the last 6 weeks has been money out of AI and into proper stocks, like the mining stocks.
You
like
say it just
BP.
to wind me up?
Yes, absolutely.
Okay, fair enough.
Oh, look, Whitbread up in the day. Thank you very much. That was a trade, sir.
That did well.
Hey, £24.56. Almost 2% higher now on Whitbread. I take it. Take that for the morning's work. So somebody asked at the weekend, I said, "Oh, it's a dummy account you run, isn't it?" I said, "Well, no, that's my portfolio. I'm a client. That's the only reason I come in the morning."
Breathe the markets.
Yeah, I would not get this animated if it was.
No.
If it was a demo
Money
account.
Imagine.
Right.
There, I think.
Axel is ready to go with trade of the week. How was last week's?
I wish you wouldn't ask me this.
Axel, what was the trade of the week last week?
Is it long S&P? Long S&P.
Long S&P, which was working beautifully until overnight.
Well, yeah, but I think it's probably got more of a upside target around 6,800 and above, he said from last week.
Good. Right. Axel is coming up next, and then I'll be joining Garth McKenzie to take us through some of the processes, the mindset that he puts into his trading. That's in about 40 minutes. We'll see you then.
Bye-bye.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hello everyone and welcome to Trade of the Week on Monday, the 1st of December. And basically what I would like to do today is to go long the euro against the British pound, because I believe that the last few days has given people enough time, or analysts I should say, enough time to analyze the UK budget from last week. And perhaps we will see movements that we didn't see last week. Also with Thanksgiving, Thursday, Friday, many people weren't really involved in the financial markets that much. So we could see a reaction now. And that's maybe what we're seeing today. We can see here on the euro sterling chart that we're already heading higher, having sideways traded for 3 days since the budget last week. Now, also, from a technical perspective, I like this trade simply because you can see here from the May lows, we've got a very nice uptrend and we bounced off that. So that is another reason for me to believe that the corrective move we've seen from the highs seen in mid-November might now have ended and that we're heading back up again. Now, would I get in straight away? Probably not, because from a risk-reward perspective, my target is not that high. So right now would be a one-to-one reward to risk scenario. So I'd rather wait for a minor retracement towards 87.75, for example, to get back in with a very tight stop below last week's lows here, just below it at 87.45. But I'll summarize this in a moment again. But before I do, I'd like to talk about last week's trade of the week, which was to go long the S&P 500. And you can see here the horizontal line. That's where we went long at. Excellent trade. My upside target was 6,800 or above. So you can either get out now, and because it's heading towards the end of the year, and I'd like to keep my stats ideally above plus 20%, risking, as you know, only 2% of capital per trade. I think I'm going to cash this one in at 6,812. So that is the trade of the week from last week. And the previous week, I made a mistake. Yes, it happens to the best of us. So basically what I've done, I went long, as you can see here, the British pound against the US dollar. We did so on at the beginning of November. It went straight away in our favor, but we didn't hit our upside target. And what I then did is I moved my stop up from that low to the next lower low. And had I not done that, we would still be in profit now, but basically just got stopped out with a small loss here. and yes, then the market went higher again. So that was from the previous week. So back to this week's trade of the week, and as I said, I would like to go long the euro against the British pound. I'd like to do so at 87.75 with a stop loss at 87.45 and an upside target at 88.15. That is 8815. Hi and welcome to Technically Speaking, where you can send me your questions to do with technical analysis, and or you can ask me what I think about the charts that you are looking at or trading at the moment. Obviously, I'm not giving you any advice. All I'm doing is analyzing the chart and looking at the price action really to see what scenario might be the most likely going forward. Now, I've already got a question to do with Peel Hunt. Let's have a look at this share. And we can see that we are bobbling along a resistance. Exactly. You can see it's not the most liquid of stocks, but you can see here that we have come out of this downtrend we've been in since August of 2024. Formed a nice bottom and are now in an uptrend since basically May of this year. The question is that uptrend likely to continue or not? Well, we can see that from a technical perspective, we remain in an uptrend, even though we're trading sideways at the moment. So why are we in an uptrend? Because if you can see here, you can see we're still holding higher highs and higher lows. And yes, I know we've been sideways trading since the beginning of September, as you can see here, but that in itself is not a problem for me. So you can see the share price here basically moving in a trend, and then quite often, so an uptrend or downtrend, and then quite often it plateaus or it sort of sideways trades for a while and then it continues its trend. You can have that here again and again. Same thing happened here in July. Between July and August, we're just sideways trading. And then we broke higher at the beginning of September. Then we got into a new sideways trading range. And now, because of that previous uptrend, I would rate the odds of it breaking higher as higher than or greater, basically, than it reversing to the downside. So for me, as long as we can stay above not just the low here from the 20th of October, ideally the slightly lower low here on the 15th of September. So we're talking 102.55, let's say, on the daily financial bet. As long as we can stay there on a daily chart closing basis, this medium-term uptrend remains intact for me. And what I would like to see now is a rise above the last reaction high, and that is this high here from the 31st of October. And because we've got a slightly higher high there on the 5th of September, probably that one as well. And that high here was made 112.05. That needs to be taken out, that resistance, for us to then head higher still. And you can see that this resistance here was made marginally below these lows going back to February and also April of 2024. So that area acted as resistance here. It is currently still acting as resistance. As you can see here, we are being capped by these previous lows, which is why it's important to always look at previous lows and highs. But if we break through this resistance area here, the next upside target is probably this high here from November 2024. We're talking 117.50 or so. But for me, this uptrend remains intact. Now, I've got a question on Bitcoin. And yes, Bitcoin is still down 5%. And if you read my articles on Bitcoin, you can see what I think about them. I'm going to write another one today. So have a look at social media, Axel Rudolph, IG, Bitcoin, and you'll probably find my articles probably out. I mean, I haven't written it yet this afternoon, and you can see what I think of Bitcoin. But if you read it over the last few weeks, you can see that I've been saying since basically these highs here, these lows, sort of end of October, I've been saying we're going to head down again. My downside target was 90,000. That got hit. We actually went to nearly 80,000, as you can see here. And look, we are still in a downtrend. I mean, every time we have a bounce higher, you can see we go back down again, bounce up, back down again, bounce up, back down again. So as long as that doesn't change, we are technically in a downtrend. And I know a lot of people are underwater with regards to Bitcoin and other cryptocurrencies, but the trend is your friend and the medium-term trend is pointing down. Now, for this to change, what we would need to see is a rise and daily chart close above the late November high, and that was around, I think, 93,050 or something like that. So we need to take that high out on a daily chart closing basis for us to then head higher again. But even then, we've got a lot of resistance to contend with. Why? Because we've got all of these highs here from early February, late February, then we've got the lows here from June, and then we've got the lows here from November. So this whole area around 100,000 is not going to be easy to be broken through. Also from a psychological point of view, it's a round number. So I think there will be quite a lot of sellers up there if we were to manage to get up there, even if we were to take out this 93,000 high from last week. So Bitcoin for me is still in a downtrend. And if it continues to decline, well, how far can we go? Well, the next target is obviously the low from November. So we're talking just below 81,000. But then below there, you've got the lows between February and April of this year. And these lows were made around 78,200 all the way down to 74,500 approximately. So that would be the next downside target area for Bitcoin. But yes, technically speaking, Bitcoin is still in a medium-term downtrend. And unless we take out the late November high at 93,055 on the daily financial bed, this trend remains intact. So just be aware of that. Now, with regards to another one, I don't know what this one is. The German bubble, I guess you want to look at, Boston Franc. If it isn't, let me know. That's the 5-year German bond, which is heading down. I mean, we sort of bounce back up against this resistance, but we keep falling and we're heading back down again towards the mid-November low. So I wouldn't be surprised if the bubble futures contract were to slide further. And if we were to fall through there, then we could head back down towards the late September low. So that is my view. And that view will remain intact as long as we don't take out these previous highs, which are resistance, which are around, on the daily financial bed, I believe 11,817.5. So that is what I can see on this chart here. But yes, we're still in a downtrend. And the gallery was just saying something to me which I didn't hear. Sorry. Let's do Greg's. Of course, we'll do Greg's. I was going to do Greg's. Greg's is looking more positive, and we can see why here. We had a downtrend, clearly. You can see a series of lower highs, lower lows. Then this bullish reversal, bullish close. That in itself didn't mean much because you can have those in a trend, and if it doesn't then lead to another bullish candle being seen, it's just a continuation of the trend like here. But the difference with this one is we did see another bullish candle, and it was even longer than the previous one, and we managed to break through this downtrend line and close above it. And what we've done since, and for me that's also important, as you know, I don't just look at trend line breaks, I also look at whether the next or the last relative high or low has been broken. So what do I mean by that is, if you look at the downtrend here, yes, we closed above the downtrend line, and then what I do, I look to the left and see, where do I see a candle where the high of the candle is higher than the one to its left and to its right? That's the last relative high. This one here from the 13th of November. And you can see that one here has now also been taken out today. So today, if Greg's, that's an if because we're still trading, the day is not over yet, but at the end of today's session, if the Greg's share price closes above the high we made on the 13th of November on the daily financial bet at 1,586, then for me that would be a definite sign that we have broken through this downtrend and are now heading back towards the upside. So how high can we go? We're currently struggling with this resistance here, the lows from mid-October, but I think the next high would be the next upside target for me, the September high here, 1,665. And then we've got this whole area here taking us all the way back up towards the early October and late October highs. And these highs are around 1,723 to 1,729. So Greg's is looking more positive, and I believe that further upside is in store for this share here, because the momentum is quite positive. We've seen a clear reversal, and you can also tell why the momentum is positive, because not only are these candles long, but if you move them to the left, you can see that within 2 days, we've basically gotten rid of 1, 2, 3, 4, 5, 6, 7. So we reverted 7 days of negative data within 2 days. And that's also a positive sign. If you, within a few days, you can take out several days. And that's basically what we've done. We've done the opposite here. So that's looking quite positive here. Now, we've got some Australian friends who would like me to look at the ASX. So we've got the Australia 200 on the daily financial bet. And you can see something similar to Greg's happening here. But here, what we haven't seen yet is the proper break. We are basically breaking through that downtrend line, but you can see here we went marginally higher here, but we haven't really had any follow through to the upside. So what I do is I don't draw my trend line like this, because I've got data going through here. So I then make it flatter here, but then today, can you see we made another high? So I would now draw my resistance line, because it's only got 2 touching points at today's highs. But yes, short term, it looks as if we're keying over. Now, that in itself is not necessarily negative, because all you're doing is losing upside momentum from the strong reversal we saw to the upside, not just in the ASX, but also in all global stocks, especially in US stocks last week. Hence our trade of the week, making us, I think, 3% last week. So that was a good trade. But you can see here that basically we're losing upside momentum. We're coming back down again slightly. But we found support today around this high here from the 20th of November, so that's positive. And this one ties in with the low here from the 14th of November. You can see a confluence of previous highs and lows quite often acts as support. That's what's happened so far. And as long as we hold there, I just think we're just sideways trading. And what I want to see for bullish reversal in the ASX to be seen is a breakthrough this resistance line, a daily chart close above it, and a daily chart close above the last relative high, which is the high from the 27th of November. And this one here was made, I think, around 8,650. So if we were to take that one out, and because it's marginally lower than the previous one, I would probably look at the high from the 17th of November as my reference point, and that one's at around 8,657. So a daily chart close above there, for me, would indicate that we formed a bottoming formation here and that we're heading back up again. Unless that happens, we're short-term trading a sideways trend, and from a medium-term perspective, still in a downtrend. So I've also been asked to look at the ASX versus the S&P. So let me just see whether I can do that here. Let me have a look. Nope, sorry, can't do it. Unless you show me how to do it. Let's move on to the next one. OPEC, yeah, interesting what happens with regards to oil and supply worries. I mean, if you look at the oil price, I've been thinking this for months, and a lot of people didn't quite believe me, but we're on a downtrend. And yes, short term, we might be trading sideways, but look at it. I mean, the oil price has been coming off ever since we came off the high seen in June of this year. You can clearly see this very sharp V-shaped reversal, and then sideways trading, and then we broke through these lows, headed lower. These lows then acted as resistance here in September, and did so again at the end of September, and then we went down to a lower range. So we fell through these supports here. They acted as resistance, and then we dropped down towards the lows we saw back in May, and we did so in October of this year. Since then, we had a sharp reversal to the upside, but you can see we've been grinding lower ever since. This is a downtrend still. Why? Because we've got a series of lower highs and lower lows, the definition of a downtrend. It doesn't matter how fast it is happening. And in this case, it's happening quite slowly. But for me, the trend is my friend and it's still pointing down. So what would I do here? Well, you can take this extreme high here and draw a downtrend line on there if you wanted to. So that would be a correct one to do, because that's the highest point. But you can see here we're trying to break through this downtrend line. But what you can also do is use a flatter one as a reference line and see whether we can manage to break through that one. And you'll see that we haven't managed to do so yet. So what am I saying? Here we go. So if we are, can you see this one? We would have broken through several times here because we're just trading sideways. So that break in itself doesn't mean much. That's why I don't like trend line breaks on their own. That to me, a daily close above that trend line is not something that I would look at. But if we then go to the left and close above the last relative high, then that might be a valid trend line break. So what I'm saying is we need to rise above the 18th of November high, and that was around $60.85, I believe. If we manage to break above there on a daily chart closing basis, maybe we see a reversal. But even then, no, we've got a slightly higher high on the 11th of November. Then we've got another one beginning of November. And then we've got all these lows here going back to, I believe it was August of this year. So there's a lot of resistance here all the way up towards $60.50. And I would be very surprised if we break through there. So whatever the fundamental reason might be, short term, what we're seeing is supply worries. Yes, fine. You know, we might bounce a little bit, but unless we take out this 18th of November high, for me, the trend's your friend is still pointing downwards. So I'd be personally more inclined to sell into any of these sort of next, if it were to happen again, these sort of reversals to the downside, than to buy the oil price here, whatever the fundamental picture is, simply by looking at the chart. But that's my personal preference. It might be not yours. If you believe that there will be further supply concerns and that the oil price is therefore going to continue to rise on a fundamental basis, well, just make sure if you go long here where your stop is probably the last relative low, so it would be below the 25th of November low. If you want a wider one, you would probably take the low here from the 20th of October. But yes, that's how I would analyze this chart. Now I've got another question to do with copper, and let's have a look at the copper price. I don't know whether you want to look at high grade or just normal copper, but the copper price is bullish, and yes, fundamentally it is also driven higher for those reasons. There is more demand than there is supply for copper. That's why the price is rising. I mean, it always boils down to fundamentals anyway. Even if you look at charts, the only difference is you don't need to know what the fundamental reason is to see what the price action is doing, and you are just acting off the price action. What we can see here very clearly is since April of this year, we've been in an uptrend, and yes, we've had a correction to the downside at the end of beginning of November. But can you see here we bounced off this early November low just on I think 2 weeks ago, on the Friday the 21st of November, and what we've done since is basically break through a resistance line, all of which is positive because we are just continuing our trend. Can you see we broke through this triangle formation here, ascending triangle, break above the last relative high, technical analysis, textbook technical analysis to be honest, and now we're trading in new highs which take us back to actually above the highs seen in May. I hadn't even realized that, so thank you very much for pointing that one out. So the copper price is trading in record highs, isn't it? Yeah, or at least as on the IG charts. I'll have to analyze it more later on. But yes, I mean, clearly in an uptrend, trading in multi-year highs is looking positive. We've had 4 consecutive months of rising prices, and the daily chart is still looking bullish. So the trend is your friend. What else can I say to you? It's still pointing higher. So from a medium-term perspective, as long as we stay not just above the 21st of November low, I know that's the last relative low, but because we had a ever so slightly lower low on the 4th of November, or if you don't look at the Sunday session, if you feel that the Monday session is more important than the 5th of November, but as long as we stay above these lows here, 10,570 on the daily financial bed, the trend, the medium-term trend, the long-term trend are still pointing higher. And the upside would probably be 11,500 and perhaps even 12,000. So copper price is more likely to continue to head higher than revert to the downside. That is my take on this chart. AstraZeneca is another question I've just been asked. Could I look at that? Of course I can. And AstraZeneca, again, looking very positive. I mean, look at this trend. And, you know, people get spooked out when you get sort of minor tops and think, oh, no, it's going to top out, because they're worried that something that they've seen before is happening again, like here, for example. But most of the time, if you have a strong trend, if there's momentum behind a move, and we've clearly seen that with AstraZeneca towards the end of September, beginning of October, and then you have a sort of slow grinding sideways to downward move, that more often than not points to a continuation of the trend. That's exactly what's been happening here. And we now need to go onto a weekly chart to see how far we can go. And clearly we've broken above the highs seen in September of 2024, which is bullish. So AstraZeneca continues to trade in record highs and is heading, well, it's hit our target of 14,000 on the daily financial bed, but how far could it go? I would have to do, and I don't have time for this today, unfortunately, a Fibonacci extension analysis to see what the next upside targets are. Without that, I would say round numbers are very important. So at the moment, you can see here we're struggling around 14,000 on the daily financial bed. That's why we're sort of losing some upside momentum. But basically, the trends, your friends, still pointing upwards. And if we were to take out the all-time high at 14,207 made at the end of November, the next upside target would probably be 14,500, round number, and then 15,000, big round number for AstraZeneca. So clearly pointing higher. For me, in the very short term, as long as we stay above the last relative low, which was made on the 21st of November, and that was at 13,516, as long as we stay above there, bullish. Medium term or long term, as long as we stay above the 4th of November low, still bullish. So AstraZeneca looking very healthy indeed. And then the FTSE. I'm just writing a piece on the FTSE. So look at again, social media. Look at my X. Follow me on X. You can see what I post and what Chris posts all the time. As soon as we post something, put it on there. But yeah, I'm looking at the FTSE. And you can look at the platform as well and the website. Right, FTSE. What are we seeing? Well, what we're seeing everywhere at the moment. We've had a really good run last week. Typical Thanksgiving upward move, and in low volatility, in low volume. Sorry, on Thursday and Friday, and quite often what happens then on when we come back from that, we take some profit, and that's what happens in Asia overnight. I wouldn't be surprised if we see something similar happen in the US later on today, but I don't know. Which is why, you know, I'm just going to get out of the S&P 500 that we went long at last week for the trade of the week. It may continue to go higher, but the FTSE, as you can see, quite often is acting in a sort of little counter-cyclical way. So if the US market does come off, the FTSE tends to come off less. The flip side of that is, or used to be, if the S&P goes up 1%, the FTSE goes up by less. This year, actually, the S&P has underperformed the FTSE 100. The FTSE has done extremely well. But you can see here, we're just consolidating now. I wouldn't read too much into it. Small candles, and basically, we've got really good support if we were to come back down again. I mean, I said that in today's piece. Basically, for me, the support areas is sort of the 7th of November low, 9,640 or so. If we were to come off, we'd probably hold in that area and then go back up again. What we need to see for the bulls is a rise above 9,740. That's the 26th or 28th of November high. Once we've seen that, we're going to head most likely, in my opinion, towards the end of October, early of November highs. And these highs here were made on the daily financial bed at 9,788 to 9,792.8. So that's my upside target for the FTSE. I think we're just going to sideways trade now, perhaps. And don't forget, we're heading into December. In the next couple of weeks, we might still see some volume, but then it's really going to taper off. And yeah, we're going to see less volume going through the markets, people winding down, investors winding down, and you know, maybe it's a good time to basically get out of some positions and just take a break. One last question I'm going to answer. It's GGP, Greatland Resources Limited. I don't know anything about this stock, but what I can see on my chart is that obviously something has clearly happened here. It's really moved higher in June of this year, and this is the monthly chart. As you know, we go to the monthly chart when we don't know much about the chart. We always go to the longest time frame we can look at. If you have quarterly charts, even better. But we can see we're in an uptrend. I mean, yes, it's still healthy, it's still bullish. We can see it heading higher. Weekly chart, we had this move down, but then we had a nice move up again, then back up. So basically, medium term to long term, as long as we stay above the October low at 322.50 on the daily financial bid, that is still looking bullish. On the daily chart, a nice gap higher here today. We've got resistance to contend with, which is this high here from the 13th of November at 415.02, if you want to be precise. That needs to be taken out for us to be retesting the mid-October high at 432.51. So bullish, and short-term basically for me bullish as long as we stay above the low seen here. These lows, can you see all these three lows going back to the 18th of November, and that was made at 357.51. As long as that's not being taken out to the downside, for me, further upside is more likely than any downside reversal. So that's my take on Greatland Resources. And it's 9 o'clock. I'll pass you over to Garth and Rich. Thanks for watching. Goodbye.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments like shares, indices, forex, and commodities without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome back, everybody. We've got Garth McKenzie in. Garth, great to see you. How are you doing?
I'm very well, Rich. Nice to be back with you. Thanks for the opportunity, as always.
Yeah. So waking up this morning, looked down at the markets, and I did not expect to see Nasdaq down 80 basis points. I definitely didn't expect Bitcoin to be down 5%. What have you seen anything, or what's going on?
No, I'm glad you're as surprised as I am, because I came in early. I mean, I start working early, up at 5 a.m. and I came into my office and I looked at that and I thought, okay, we've got futures, US futures down quite sharply. Bitcoin, down, Ethereum down 7% at the time. And I thought, what is going on here? And I read a bit of research and tried to scratch around. I couldn't really find any reason, actually. It's weird. It's like the first day of the month, first day of December, and suddenly we're just opening on the back foot, which I couldn't find a reason. So I'm glad I'm not the only one.
Yeah, and I think it was the same. I had a look around, couldn't find any headlines. So we'll see. This afternoon will be really interesting. Nasdaq now only down 50 basis points, so it is rallying. Bitcoin a little bit as well. But it might be on this Hassett story. But I would have thought Hassett's story to be positive equities and definitely positive for gold and Bitcoin.
Well, that's right. I mean, obviously, the story is that Kevin Hassett seems like he is probably going to be the next Federal Reserve chair that Donald Trump will appoint. Obviously, he's a Trump man, and the market the thinking is that he is in favor of low rates, just like what Donald Trump wants. So we can look for further rate cuts, and that should be stimulatory for the economy. I think it's going to be stimulatory for inflation as well. So, all of that, we can talk about what sectors you want to be exposed to in that case. But yes, I mean, you ordinarily would have said equities should like that. And it's strange that the equity market has started the week on the back foot in the face of what should be quite good news, really.
Now, certainly the one sort of standout for me in the FTSE especially are these mining stocks. So Glencore up 2.5, Antos up 1.5, Anglos. Is this a weaker dollar and positive inflation story? The miners are perfect for it, aren't they?
They are. So, I mean, I think it's also, if you look at the copper price, that's up overnight or over the weekend. Copper's opened up quite firm this morning as well. So have a number of other metals. So commodities, I think, is generally the place you want to be getting exposure to. And if you buy into the argument that Kevin Hassett is coming in, he's going to cut interest rates, that probably is inflationary. Like we said, in an inflationary environment, you want to own hard assets. So you want to own commodities. And that I believe is the reason why we're seeing gold up this morning, why we're seeing silver. Silver's had a big move up. As I say, copper is up, platinum is up. So all of your mining stocks will be firm on the back of that. And it's been quite interesting over the past week or two where the US market has staged a little bit of a correction. Not a big one, but about 4% from top to bottom recently.
Yeah.
But in the face of that, it's been quite interesting to note how well the commodities shares and the mining shares have generally been behaving. They've shown really good relative strength. And I think that we're probably going to see more of that. And, I'm invested in a number of these things. I see you've got the BlackRock World Mining Trust up there.
Yeah.
That's something that I own and have actually added to it on that breakout now. Through the top of that, you can see on your chart there's sort of resistance at about 680 or thereabouts, or 690. It's moved through there, so that looks quite bullish. And that's an area of the market that I believe you want to probably keep an overweight position in, because all of the stars do seem to be aligned for growing profits, widening profit margins in these businesses. And you want to own miners when their profit margins are widening.
So what do we think? We actually own this as part of the Art of Investing portfolio. So we looked into the exposure, and it's about 32% gold and precious metals, isn't it?
Yeah. It's quite nicely split actually across various different metals and let's not call it asset classes, but various different commodities, let's say. And from my perspective, we can talk about BHP and Antofagasta and Anglo American and Vale and all of these things, but if you want a broadened, diversified exposure to that theme, then this BlackRock World Mining Trust gives you that exposure in one product, which is quite neat. And it pays a reasonable dividend yield as well. I think, if I'm not wrong, I think it's on about a 3.5% dividend yield as well, which is an added little bonus if you own that.
Definitely. Now, when you spot something like that, because this sounds like one of those beautiful stories when quite a few things align, right? You're going to get the announcement later on today, and we think it's Hassett, right? We don't know it is, but you get that kind of feel. So over the day, there'll be some leaks and there'll be some rumors and everything. So if you can, get a real feel for that, he's Trump's man. So therefore, it's going to be an expansionary kind of policy, inflationary. You would imagine the dollar would weaken off the back of it because it's not necessarily the strongest. It's not another Jerome Powell or Ben Bernanke. I hesitate with Janet Yellen, I must admit, but it's not the strongest. So therefore, the dollar should be weaker. And all those things align really nicely for this mining trade. So how do you set that trade up in your mind? So what kind of processes do you go through when looking to get exposure?
Well, yeah. So, in the context of this would be a more medium-term trade in something like this BlackRock Mining Trust. That's not a day trade. It's not a short-term trade.
Okay.
But in terms of the processes that I generally follow, I like to start wide and then zoom in. So start by looking at weekly charts, which is something I try and do every weekend. I've basically got a list of things that I watch, quite a broad list of stocks and indices and ETFs and commodities, currencies, etc., that I watch. And I've set aside a specific weekly watch list for those instruments. And then I'll go through that and look at all of those weekly charts. And through that process, then effectively pull out those that look the best to me on a weekly basis. And when I'm looking at that, I'm looking at things that are trending higher, that are potentially consolidating within a broader rising trend, and above certain moving averages and what have you. They need to tick off a bunch of different boxes on a weekly basis, and then those instruments effectively make it through to the next round. It's almost like a filtering process.
Okay.
So they then get through to the next round where I say, okay, I've taken this, let's call it 150 instruments that I'm now filtering down, and maybe out of that I pick out, maybe there's 20 or 30 of them that actually meet the criteria that I'm looking for. And then I will start to look at those on a more detailed basis, then drill down into the daily charts to try and identify shorter term, either support or resistance levels to look for an entry point or a breakout or something like that. And through this process, through this filtering process, I'll end up with a couple of instruments that I'm watching closely for the week ahead, that I'm either looking to put a trade on, or maybe I'm already in and I'm looking to add, or perhaps I might be in something which is starting to roll over and maybe I don't want to own it anymore. I want to start considering exiting it.
Like an NVIDIA.
Yeah, exactly. Good one, actually, NVIDIA. And I want to talk more about that in a moment. But in terms of the process, you know, there's the next step in the process is to then say, well, what has met my criteria, all my different technical criteria based on this bigger picture view, as well as on a smaller picture view. And then you start to put some some actionable trades into place. And when I talk about actionable trades, I'm talking about a decision in terms of how many, what size do I want to buy? Where would my stop loss be? What would my level be that I'm willing to pay? Now, what's my maximum amount that I'm willing to pay up before I acknowledge that I've maybe missed something, right? Because I don't like to really chase. I don't like chasing in anything too much. I prefer trying to get into it where I can get a good risk to reward ratio. And the important thing, probably the most important thing actually, is position sizing and risk management. You want to know, where do you stop out? At what point do you say, well, I've clearly got this trade wrong and I need to therefore exit? And in the event that that does happen, how much am I willing to lose? Because remember that in trading, it's always really a probabilities game. We want to initiate trades where we know the probability is stacked in our favor for a positive outcome. But there's no guarantees in this game. You can have the best looking setup in the world go against you. And for that reason, we always have to start with risk management. And the key elements of that are your stop loss and your position sizing. And of course, then the discipline to adhere to a stop loss when the market is clearly showing you that you're wrong. And I think if you get that right, and then you make that as part of your process, then you'll be okay. You know, the key thing, and I know we've spoken about this before on the show, but I mean, it's important to reiterate, is that with every trade, really, there's really 5 possible outcomes, right? You've got a big winner, which is the one we all like. You've got a small winner. You've got a break-even trade. You've got a small loser, or you've got a big loser. Now, just eliminate that big loser from your trading. Just don't ever have the big loser, and automatically you're already, you're going to be a survivor in that case. Trading is simple but not easy, and these are some of the, there's only a handful of ways that you can really blow yourself up as a trader. Unfortunately, a lot of people, a lot of DIY traders, amateurs, find one of those few ways to blow themselves up.
Jump on the grenade.
Yeah, exactly. And it's because human emotions get involved, right? We don't like cutting losses. It feels wrong. We don't like being wrong. But in trading, you have to acknowledge that you're going to be wrong a fair number of times. I know from my own trading, and I've been at this for 25 years nearly, my success rate is about 65%.
Cool. That's good, isn't it?
Yeah, it is good. Yeah. So that's sort of 2 out of 3 trades are winners. And it's not to say that they're all big winners. Some might be small winners, and you get a couple of big winners here and there. But what I know is that statistically, I'm going to lose on 35 or 40% of the trades that I take. And so for that reason, I go into every trade knowing that there's a chance that this might be a losing trade. And if that is the case, how much am I going to lose? And am I comfortable to lose that much? Yes. Okay, let's do it. Tom Hogarth wrote a great book. I'm not sure whether you've read it, Rich. It's called The Best Loser Wins.
Yes.
And the name, it says it all, right? It's just such a great title for a book. But it's so perfect, because that's exactly what you've got to remember as a trader, that you've got to learn to be a good loser in this game. And if you can keep your losses under control, then the winners will generally take care of themselves.
And what is the right kind of stop loss on a medium term trade? So we just paid £7.08 for that. You said you've added to it, but this is my first print.
Mm.
Where am I wrong on that trade? And where is the market telling me, no, you've got this completely wrong, or you've got the timing wrong?
Yeah.
And under what circumstances do I add to it?
Okay, so I mean, I think above £7, it's looking good. That's the breakout. I would say that as long as it's staying above its 50-day moving average, you've got to accept that you're probably on the right side of that trade. The 50-day moving average comes in right now at about £6.70. So that's where I would place an initial stop loss. If it broke down below that 50-day moving average, then I think that would be an indication that it's not doing what we think it should, and that would be good enough reason to then exit that trade.
Okay.
If it's going to follow through and it's going to do what we think it should do, then it shouldn't come back and violate that 50-day moving average, not in the near term anyway. So that would be my initial stop loss. I would probably look to tighten that up over time as the price moves higher. So if we continue to break out through that £7 overhead resistance region and keep pushing higher, you might then say, right, let's ratchet that stop loss up to our entry point, at which point you've then got no risk on the trade. You effectively got a free hit. And what would in all likelihood happen with a thing like this is that it'll face some sort of a consolidation at some point. It's not going to just go straight up in a straight line forever from here. It'll go up a bit, and then it would likely take a bit of a breather, pause a little bit, and then probably set up the next type of continuation pattern within a broader rising trend. And once it's set up that continuation pattern, that might then give you the parameters to look to add to the trade. And when I say a continuation pattern, I'm talking about things like flag patterns or little falling wedge patterns, or perhaps a little triangle or a pennant or something like that. Basically what it's referring to is the price has run hard, but it's just going to catch its breath for a little while before it then has the energy to keep moving. And those continuation patterns within a trend are what I look to add to a position. And then when I add to the position, I'd probably treat the new addition as a new trade with its own stop loss and its own risk management, in addition to the initial trade that we had already put on. But remember that by that stage, you've moved your stop loss up on your initial trade anyway. So you've eliminated the risk, or you've certainly reduced most of the risk out of your initial entry on that trade. And you're now ready to add to it with new risk parameters on that new portion of the trade that you add to.
What if it gets down to the 50-day moving average and there's a story out that you take as positive? So you should be cutting it, but you think the story is just as good, or if not better.
Well, I think you've got to look at what the price action is doing. If the story is good and the market believes the story, then the price will respond accordingly, right? So it should then hold the 50-day moving average or stay above it. What you don't want to do is, if something, if for whatever reason it starts to trade weaker and it starts to break down below the 50-day moving average and it's looking weak, what you don't want to then do is double up. Because this is what a lot of people do. They say, well, I like the story. I like it to break above £7, whatever. But now you're in it. It's going the wrong way, and it's losing you a bit of money. But you now start to justify to yourself why this is such a good trade, and you should keep it and even add to it. And that's where people go wrong. Don't add to losing trades.
And this is exactly what people will be doing in the AI stocks right now, right?
Of course, and it's glad you brought up NVIDIA here, because this has been really interesting over the last 2 weeks, really.
Yeah.
They came out with earnings approximately 10 days ago, I think, and they were very good earnings, and yet the market sold off after an initial move to the upside, but the market then sold off heavily. Now, that's not the kind of price action you want to see. You don't want to see good news bad price action. There's a message in that, and the market's probably sending us a message that it's thinking that this is as good as it gets for Nvidia, and that looking forward, and remember the market is always forward looking.
Yeah.
That looking forward, maybe earnings growth cannot continue at the same sort of pace as what it's been going at, or their profit margins, which are extremely good. But I mean, can their profit margins get any wider than they already are?
Yeah.
Probably not. So you start to look at that and say, okay, it's been a good run, but the price action there has not been particularly good over the last week or week and a half. So there's a message there. And I think it's a message we shouldn't ignore. And I think Nvidia under $180 per share looks a little bit vulnerable in the short term. And if it stays below $180, then I would think that one needs to be a little bit cautious. Possibly it's even time to just lighten up a little bit, because it's had a very good run, but it has been making that rounding top pattern for quite some time now. And we know that trees don't grow to the sky. At some point, these things do eventually, consolidate, and they reach a plateau. And it feels like we're at that point with Nvidia now.
And is this where you can say that a lot of damage has been done between 180 and 185 or 186? Because 186 was where we were when the numbers hit the screen. So
yeah.
Go on, sorry.
I'm just getting it up on my side. Yeah, so to me, the technical damage is if it stays below $180. That's been the lows through October and through early November. That has been quite a crucial lateral area of support at about $180.
Mm-hmm.
So if it stays underneath that level, then to me that is a little bit of a problem for the short term, and it could indicate that it's vulnerable to more profit taking and perhaps to a slightly deeper pullback. And I'm not saying I'll turn super bearish on the stock or anything like that, but I just certainly think you've got to temper your bullish expectations, because it's not a good look right now the way that share's been trading, with weak price action after what was really such a solid earnings report. But the market does look forward, like we said, and what this price action to me is saying is that the forward outlook is perhaps not as good as what we've become accustomed to, or maybe the kind of growth that we've become accustomed to just can't be sustained anymore.
Where would it start to get interesting if it did come up?
Well, your 200-day moving average is down close to $150 a share.
Wow.
So I would think that would be an area where if it falls that low, that probably would be a region of support if it gets down there.
Yeah.
And that would be a zone to potentially look at it. But, also if you look at these sort of companies and you zoom right out, Nvidia, I mean, it's a phenomenal business, and no doubt it's continued to grow and grow. It's become the biggest company in the world. But it does have these periods where it runs too far in the shorter term.
Definitely.
And then it pulls back. And it's not uncommon to see Nvidia pulling back 30% or more in a down cycle. And it can happen again. And I'm sure it will happen at some point. And you look at it and you say, well, yeah, are we at the early stages of one of those drawdowns? Possibly we could be. Yeah,
it's exactly it. If you look back in June of last year, then we dropped from 140 down to sort of 90, about 97. So, yeah, exactly 30%.
Yeah, and if you go back even further, it's done that a couple of times. So, yeah, phenomenal business, overall rising trend, growing, etc., etc. But we do know that this has become a space which is very, very hot, this AI space and the AI capex and all of that. And obviously, Nvidia has been a beneficiary of that. But we also do know that there is some competition coming. We saw recently that Google, funnily enough, looks like it's probably a competitor that they really need to keep an eye on.
Yeah.
I think I heard that being termed frenemies. Right, because they kind of are frenemies. They do need each other to some extent, but also they're competing against each other. And I was wondering over the weekend now, and I'm not sure whether this is the trade I'd do, but it's got me thinking, is would you take a view for the next 12 to 18 months of long Google, short NVIDIA as a pair trade? And the relative charts are starting to turn up in favor of Google. But I don't know that I'll take that trade, but it's certainly
I don't think
something
there's an
that's got
answer
me
to
thinking.
it. I think things are changing so quickly, right? If we go back 5 months, then you were an idiot for being in Google relative to NVIDIA.
Yeah.
And if we go back 3 weeks, then, you know, somebody needed to tell you, oh, by the way, Buffett's buying Google, for you to suddenly take notice. And then we've had, you know, 2 positive stories. So I think, you know, if suddenly we know that Jensen's quite close to Trump, if there was a movement on NVIDIA selling chips into China and there was demand there, then NVIDIA would be back all-time highs, right?
Yeah, possibly. And that's why I think it's not a trade I'll do. And if you actually zoom right out on the relative chart of Google versus NVIDIA, NVIDIA has been the outperformer for a very long time. And those periods where Google outperforms NVIDIA are quite short-lived. And that's why I sort of thought, fundamentally, I think I can kind of make a case for this, but I just don't think it's, you know what, I just think there's better trades than that.
Definitely.
And that's the key. That, you know, it's opportunity cost. Where would I be better off in that, or would I be better off finding something else to do that's maybe a higher probability? And I think there are higher probability opportunities out there, notwithstanding the fact that I think the NVIDIA and Google comparison is interesting at this point.
Oh, definitely, yeah. Now, back on the trading floor, one of the first things I was taught that when the S&P was up 7 points, then my colleague would shout, "Lemonade the street." And this was, it took me about 2 weeks to cotton on to what on earth he was talking about. Of course, he was talking about 7-Up. At last, we've actually got a stock called Lemonade. What are you seeing in this one that interests you?
Yeah, so just so that the viewers know, there's got nothing to do with Lemonade, the drink, or 7-Up or anything like that. It's actually an insurance company, but it's a fintech insurance play, and they've got some very interesting ways in terms of of how they identify risk and measure risk, all using big data, etc. So it's an insurance company that's growing. It's got quite a compelling business model. It's starting to get a lot of penetration in various markets that it operates in, and it has a long runway to still continue to grow and to build market share in the markets that it operates in. And I like the technicals here. I like the fact that it had a big breakout on big volume recently following earnings earlier in November. And to me, that whole structure just continues to look bullish. You know, if you zoom out again, Rich, and just have a look at it, you'll see it's been making steadily higher lows and higher highs for some time now, after building out of a nice big base. So to me, that's sort of like that step-like upward pattern in the chart is appealing. But also something that stood out for me about this particular stock in the last 2 weeks, let's say, is that it's actually shown really good relative strength. I mentioned previously that we've had through November, we've had a period where the S&P 500 pulled back about 4.5% at one stage. During that time, Lemonade's share price has stayed pretty robust. And hasn't really pulled back to the same extent as what the broader market has done. So for that reason, I like it. I like, the one thing about a market correction or weak period in the market is that it gives the strong stocks an opportunity to stand out. And it's one of the things you should always do during a corrective period in the market is start to make note of which stocks are staying strong, because those are your leaders. And those are generally the ones that you want to buy for the next up leg in a market cycle.
Well, if this market turns higher, then this thing's ready to pop, isn't it?
Well, that's the point. Exactly. It's got very little resistance above it. It's got loads of support down below. And that's the kind of stock, when we talk about looking for high probability opportunities, to me, this ticks a lot of boxes as a high probability setup. And I like to buy strength. And this is showing strength, showing excellent relative strength. And for that reason, I do own it, but it's something I'd possibly even look to add to now. If we believe that the market's going to take another leg higher at some point, because this has shown its relative strength during what was a slightly weak period in the market recently.
Excellent. Good stuff. Any golden cross yet?
No.
Gareth, thank you very much for joining us. And that's a really good explanation on your processes and the thought process as you put the trades on as well.
Super, Rich. It's been good chatting to you. The time's gone really quickly this week, so thanks.
Good stuff. Right, we'll chat to you soon. Thank you very much, all you guys, for joining us today. I hope Axel's trade of the week has given you some food for thought. Relatively quiet morning. Let's take one very last look at how these indices are looking this morning. It's going to be a really interesting afternoon, actually, because Nasdaq down 60 bips and the DAX now down 70. Bitcoin trying to hold the 86,700 level. With gold, 4,250 in its sights there. We shall, let me see, a bit of housekeeping this week. So tomorrow, Garth, sorry, you've got to hang around and listen to all this. We'll say goodbye.
That's fine. I'm listening.
Okay, good man.
All right. Cheers.
So Finimize have a wonderful conference over the next couple of days, Tuesday and Wednesday. So tomorrow we are going to be doing a live Art of Investing podcast. It's about 4:15 in the afternoon. We'll put all the links and everything up on the chat tomorrow. But it will be a live Art of Investing podcast about 4:15. Kathy Wood is also speaking at the same event. So that's absolute pleasure for us to get the chance to speak just after Kathy. And then also in the evening, I'm hosting a chat on Bitcoin and Ethereum. And that's actually at the event itself. So we'll give you more details on that tomorrow morning. But for that reason, I am off tomorrow morning. Angelina's back in the seat after her gallivanting away to do interviews at Baird Capital this morning. I'm just getting text messages from her at the moment as well. I think I've got a photo and everything on how the setup is for the interview today. So that will be a good one to watch. And then, yes, on Wednesday, I shall be back, but Angeline will be with you tomorrow morning. Peace. See you tomorrow.